The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome back after a busy weekend, I'm sure, for everyone. And Dow's down 417 to 24,340. S&P's down 36 at 2694. The QQQ, well, let's go to the comp index. The comp index is down 63, and the QQQs are down 1.43. This is going to be a very interesting session for a number of reasons. What I said to subscribers on my opening call for the last couple of days that we've had so many peak Ds and a couple of Es, but mostly peak Ds in the daily charts as the technicals were turning down, that we had to become cautious. So we're out of our long position of the Dow. Unfortunately, two things happened. One is I did recognize and spoke about it on Friday that my Chapman wave trend gauge had flashed a signal to say that within two sessions, there should be a 9 to 11 point E-mini rally, S&P E-mini rally, which should help the cash and the cash Dow and S&P rally. But on Monday, we had a holiday. So what happened was Sunday night, the futures spiked sharply higher. That was probably North Korea talks. And what happened was the E-mini futures of the Dow went much higher. And on Monday morning, even, they were quite a bit higher. But we weren't trading. So the trend gauge did its job. Unfortunately, I wanted to switch from long to short. I didn't want to short a gap down like we had this morning. It's a pity because it was just a perfect opportunity. Why? Because there was a chance that the Dow, the S&P, a number of the indices could break under their 9-period moving averages as the MACD was about to turn negative, and the stochastic, even though they were holding quite well, could slip under 80%. So the timing would have been perfect. I just didn't want to take the risk of shorting a gap down. Probably that was exactly the thing to do, but we didn't do it. We still have some longs, still holding very well. And now what's really interesting about this is, let me run the numbers. So let me go. The E-mini's down 35 at 2682. Peak D at 2741 in the E-mini, and that was on May the 22nd. There's that H pattern that goes to a lowercase m pattern. It is resilient. It is a powerful tool that we've been using. And that weekly chart says, yep, back in the trading range, that middle of the trading range, 120-minute chart made a sharp pullback right there after that peak G at 2741.75. Let's get out of this, and I'll run the numbers as I see them. Here we go. The Dow down 429 now. This is a leg B to the downside. MACD just crossed negative. Stochastic went from over 80% to now 66%. There's that H pattern to a lowercase m in the weekly chart. Monthly chart is now saying, aha, there's going to be a tough period coming up because there's an upside cap. It's how we hold support. I was asked, would I be able to tell where the downside is? There are two things going on. One is that there's a downside support with a trend line in the Dow weekly chart that says around about 23,800, 23,770. That should be good support. The next one says, if that fails, we're going straight down to the 23,300s to do a retest of the lows that were made both in February and in that March-April low. Okay. Upside now is the 24,685 at the 9-period exponential moving average resistance. S&P. S&P is down 38. The cash is, there's that H pattern to M pattern in the weekly chart. Monthly chart holding above the 9-period moving average. Peak D in the 120-minute chart. Kaplop. Peak D in the daily. Kaplop. So this makes the 2740 to 2728 area very strong resistance. Actually, if it starts to get up there again, that resistance could be taken out. It's how it gets there. Most importantly, how do we hold the 2675 to 2672 next area of support? So that's going to be a tough hoe to row, as they say. QQQ down $1.59 at 168.13. Made a peak D in the rectangle formation, hasn't broken down yet. MACD's just about across negative. Stochastic's down at 78%. That is negative. And what we're watching is the 170.82 all-time high. Recent high, way below the 175.21 high of the 17th of March, around that week. Shows that, yep, if the Qs this week take out 166 support, that's going to be very negative. This is very interesting, and I'll explain why immediately. Look, SMHs are now down $1.17 at 107.15. Leg D, it extended today, that leg D, right into the 108.49 area, just under the 109.13 level. We remain long at this particular point via the 3 times long. And this is going to be very interesting. Why? Because the MACD is still very strong. Stochastic is very strong at 94%. And all the time that the market was down today, the SMHs were strong. It's just this last 100-point slide really took everything down with it. Not everything, almost everything. So I'm watching the SMHs as really a benchmark, a key to everything that we're doing in the first 2 weeks of June that starts today. End of May, going to the first 2 weeks of June. A close below 104. No, let's make a 103.50. Says, SMHs are now going to indicate that the upside is very limited in the general market. I want to go to the IWM. Now, this is fascinating because the SMHs, the semiconductor ETF, was doing what the Russell was doing back when it was down in the 157 area. And I was saying, yeah, it's holding, no, 156 area. I was saying it's holding very well. But to be a leader, you need to break out and lead. You can't just hold very well. Well, it did just that. The IWM, the Russell 2000, went to 163.33, peak F in the Chapman wave, pulling back now sharply. Down $1.40, actually not as sharp as the others in percentage terms, but $1.44 at 160.29. If it takes out 150, don't do this too quickly. 157.70, a close below that anytime this week says, got a problem here. IWM is not leading anymore. It is starting to digest huge gains. And the weekly says, well, it's a peak B, but watch it closely. I should say alternate count, but I'm leaving it as a B for now. And the leg F in the monthly chart says great action, and we went to a peak F in the 120-minute chart. So we're pulling back. This is based on the Chapman wave methodology. Now let's go to gold. Gold was quite a bit lower earlier on. Now it's up $4 it was up much earlier this morning. Then it was down, and now it's up $4.40 at 1308.30. This is very interesting action. Why? Because that dollar, which we still remain long, now this is very interesting, I'll explain something, is at 94.80.59, having hit a high today of 95.03. 94.22 was the high that was our target. We went above it. 95.15 was the major high back in 2017 that we were looking in cup formation. I'll talk about this when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just continue with this. The beginning of the week, we want to be as clear as we can. So the dollar, I've got this as a leg outside. It might have recycled because these are powerful moves. But the MACD is bouncing like an M-shaped pattern. See, it's getting a little tired. And the stochastic is very strong at 90%. Relative strength is very good. So I'm suspecting that the dollar could have a sideways pullback, and that pullback could even take it back to the 93.50, 92.70 area, key support in the weekly chart. But what's really powerful is that in currencies, when they do start a trend, those trends can last a long time, as we've seen right here from the February low of 88.28. Every month we've just been already moving very sharply higher, and you've gone from 88 to 94 in a currency to do that on the way up. We've seen it quite quick on the way down, but on the way up doesn't always work out. If you look at the EUR-USD, this is the euro-dollar currency pair. Look at that tumble to the downside. Very few green bars. The dollar at least had a couple of red bars. This one just went straight down. The dollar on the way up, so this is on the way down. So this is not very good for the euro-dollar currency pair, trading at 1.158, down 0.006. But the flat stochastic says this is about where you could see a bounce attempt. The MACD says, wow, bounce attempt, it has to be a move from 1.15 to over 1.176 to really make a difference in the technicals on the daily basis. Weekly's going to take a long time. And if you look at the USD JPY, remember I spoke about the dichotomy the other day that the dollar was soaring to the upside and you had a peak deep pullback in the USD JPY, the dollar yen currency pair. So the yen is pulling back sharply in leg B to the downside before. And this is why I always say, if you have synchronicity between currencies, either they're going together or there's a counterpoint move, you can rely on that only until it stops working. I would never say to you that the dollar is going to go much lower right now because the yen has already been going down for 2 weeks. What I would say is that there's been a relationship and there's a chance that the yen is saying right now that the dollar is getting a little bit overbought because the yen has made the Chapman Wave stalk leg formation to peak D, gone underneath the left side trough of the oval pattern, the body, If it closes above it, that's going to be important. If it closes below it, that's going to be important on the downside. So that's that. And I wanted to do this quickly, show you silver. Silver is not acting as well as it should. It's down 0.12 at 1642. Unless silver, really, it's the same as gold. Silver needs to break decisively to the upside. It needs to get to the 1680s, really needs to get to the 17s and hold there for about 3 out of 5. An entire week of trading above that, even if they're minor pullbacks. And if you do that, you have to say gold has to, this is a nice candle. Candles are no good. I want price movement. I want to see gold above 1320 very soon, and then 1335. Now we have an irony here because we've been long the dollar for a long time, but I also added the GDX, which is the gold miners for subscribers. It held support. It's down at 22.29, down 2 cents. I just thought if the dollar starts to take a bit of a breather, there should be some relationship with the gold acting pretty well. And then GDX should move at least nicely. Doesn't have to move great. I just wanted to move nicely. Okay. Now, a couple of questions I had, and I'll get to them. I wanted to show you crude oil. Remember peak D in the daily. It's the reason why I say to subscribers, be careful. Peak D and all these different key indices. Crude oil made a peak D right there at 72. I don't usually put the price in because the price changes because it's a continuous contract, but it was 72.90. It was the high of the 22nd of May. We've gone from 72 to 66. 6 points straight down. Look how long it took to go up. Look how quick it goes down. So sometimes that happens. Other times you get a perfect left side, right side, moved from the left side lip to the base back up again, or the arch formation from left side base to the top to the bottom takes the same number of bars, except in crash modes. And in this particular instance, crude oil, I can't really put it in crash mode if you're looking at the daily. Believe me, if you're looking at the weekly, this at peak D right there, that last section right there on the 25th, 26th, 27th, crash mode. But it's in the short-term basis. Okay. Now, what am I forgetting? Oh, I'm not forgetting. I'm going to show you something that, this is what I spent time over the weekend. I showed my subscribers to my opening call. Look at this. I gave a very detailed, where did it go? I'll find it in a minute. Okay. Showed a very detailed, did I or didn't I? Oh, did I take that off? Yes, I took it off. Okay, this is the 30-year is the white, the TYX weekly chart of the T-bond yield. T-bond yield is trading down at minus 94, 29.96 after making a peak D last week. I was waiting for the D. I said, when we get the D, we should get a change of trend in the yields. And lo and behold, not only have we got a trade, look at the speed of this trade, this inversion, and look at the TNX. I've never seen bars overlap in the weekly chart in such a short period. From 2 weeks ago, they were up together. The little, you know, how when you see these little squirrels chasing one another, and they're right behind one another. Well, look what happened on the way down. It's the same thing. The TNX is now trading at 28.10. Just the other day, it was at 30.84. And the 5-year has gone from 29.41 to today's low at this point of 26.34. That is big. That is big time. And it says that yields are pulling back and that maybe there's some kind of a recession going on. And one of the reasons I say that is because we've been following, like we always do, CTA, Syntas. I showed my subscribers the other day. Syntas, look at this, holding quite well after the top that was made, all-time high, leg E in the monthly chart, an F/B. Maybe it's going to be an F right here at 184.22. And that was the week of the 18th. And look at this, goes to a peak E alternative count. This is going to be really important. A couple of things. CRM, this is the cloud computing. I showed my subscribers over the weekend. A little problem here. It's the same chart as CTAS. It's saying, hey, I'm starting to struggle. I don't usually struggle, and I'm struggling right now. Not only that, I showed subscribers, where is it? If I can just find, I hope I've still got it here on my notes, on my daily call. Yep, there it is. So here it is. Look at this. Salesforce WeWork is opening a second headquarters in Salesforce's new $1 billion skyscraper. Look at this, $1 billion in San Francisco. It opened officially just the other day. When did it open officially? On Tuesday, I think it is. It had opened actually in January, but the official opening, Tuesday. I'm looking at this and I'm saying, uh-oh, let's be careful. This is one of those things that I look for, even if it's just a short-term top. One of the things I look for is skyscrapers. I'll be talking about that a little bit tonight when I give a talk at the Boston Investors Group, the meeting over at MIT in Cambridge, Massachusetts. I wonder if I've got it right here. It'll be 7 o'clock tonight. I'd love to see you. It's going to be quite exciting because I always get asked questions that really make me just to cover. Now I think I've lost it. There it is. It'll be right here. So this is Tuesday, May the 29th, 2008, from 7 p.m. to 9 p.m. MIT Building in 51 room 33570 Memorial.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
At the Dow down 429, S&P's down 37. This is going to be interesting. So, right, let me finish up. So tonight, the parking, if you want to go to Amos Street, which is parallel to Storrow Drive, to Memorial Drive, I'm sorry, that should be good. It's just around the back of the building, and you can park there, I believe. I mean, it should be quiet time, it's holidays. So it'll be tonight, 7 o'clock. I'd love to get all your questions. Now, a couple of things I wanted to mention. the financials. So we had a particular financial stock, very low price stock, did fabulously, gave very nice percentages. We took something off because stopped out on Friday, I think it was. At first I was upset, and I said, wait a minute. That's telling me that the financials are in for a tough time. That tells me that if you're looking at, say, Goldman Sachs right now is down 750. You took out the left side low. If you're looking at a Morgan Stanley down 2.75 at 50.27, just about, it's testing, it hasn't taken out yet the left side low. These are serious things. If you look at the XLF, this is the financials. The financials are down very sharply, down 3.18% at 26.96. That's the XLF. Now we have the KRE. I've tightened up the stop. I don't need to have any. We're still long, still just a tad under our entry price. But no, I'm not prepared to take any risk here at all. Why? Because although the regionals, SPY S&P regionals down $1.49 and 62.72, should be holding quite well, because I think regionals are going to do a little bit better than the money center banks. This is not a period to be playing games as far as I'm concerned. I'd rather be in a bit of more of a cash position, waiting for waiting for good entry points on the long side, or today setting up some shorts because we're getting clues now what stocks I'll have. What is this? This noontime sneeze every day? I'm not a big sneezer, but I do when I do my show. This is 62.72. I'm watching this closely. Why made a peak G/C? That G could very well become a peak G. MACD's closing negative right here. Stochastic's down at 65%. Weekly chart is the middle of a trading range. Peak F in the 120-minute chart. KRE, be careful. Now, what are we going? Thank you very much. A whole bunch of questions. Let me just go through one at a time. Boeing, let's go to the Boeing. Boeing right now is down 474 at 355. It made a peak C, but it's a gray peak C. It was a round number peak C in the daily chart. It still has the peak D at the all-time high of 371.60 made on the 28th of February. Peak D in the daily made the cup formation. Then the technical started to weaken. They're much weaker than they were before. I still contend, I don't think Boeing is going to make an all-time high in this phase until it's completed a pretty good consolidation phase. I'm not saying it's going to break down or crash. I'm just saying it needs time. And that was my statement there. UTX, UTX, we do own UTX, had a fabulous game. We've been taking something off because of the big gains. We're in the 119s, it went to 128. I'm taking some off. It did go to a peak B, all within the context of a rally, retracement, failure mode, but we are still long. I'll handle it over the next coming 2 days. Let's see what happens. My contention was that if the market pulls back very sharply, but is able to hold the Dow 24, let's make it 20, on a worst case basis, 23,500s, and UTX is actually held on the next bounce. UTX could start to become a leader out of my Dow Quartet, GE, IBM, Triple M, and UTX. That's all. So let's see what happens there. Next question was, I just did Goldman Sachs. Sorry, Bob, sorry. I beat you to the punch, but you had a JP Morgan. JP Morgan is down 4 at 106.44 peak D in the weekly chart. I've only got a peak C. I try to count it umpteen different ways. I think it's still going to go to a D in 2018. So this point is just a big consolidation. Sarah wants to know about EWI. That's, I think, the Italian. Yep, that's the Italian. Whoa, look at this. The Italian ETF made a peak E-top in the Chapman Wave monthly chart back at 34.45. That was in January of this year, and now it's trading at 28. So it's down. It's not a big deal. It's only down 4 or 5 points, but it is a big deal in the sense that we've gapped down to the 200-period moving average in the weekly chart. It better hold the 24s, otherwise there's a real problem. It might chop around just under the 200-period moving average in the weekly, say in the 27, maybe 26.50 area, and then bounce. This is just not good action. Look at this, like a 1-to-1 in the weekly chart, in the monthly chart. Not good. Question came in. No, statement came in. Right there. So Basil, you've done a brilliant job. You've done a brilliant job of outlining the Dow H to M pattern in the weekly chart. Although to truly be a market technician superhero, I'm in trouble. It would be great to get your thoughts on the weekly low projection. Thanks, Kevin. So, Kevin, this is what I'm looking at here. Now, well, first of all, thank you, but let me tell you, it's not a good sign for me now. I've got the hex going to be following me. But in the meantime, back at the ranch, this particular peak D pullback and the H pattern going to a lowercase m that I've been talking about in the weekly chart, I'm still going to say that at this particular point, the floodgates that open up for weakness and selling pressure and nervousness open up very quickly, and then they close, and it takes quite a while to get a little exuberant. Towards the end of last week, we were looking at some exuberance, but I'm still going to say that I'm focusing very deeply and consciously on the SMHs, the semiconductors, because if they are able to hold very well here, it's going to say there's some rotational internal strength that I don't want to either ignore, but I don't want to make it mess me up, because I have seen periodically, not often, where the semiconductors actually hold quite well in relationship to the other indices. But it's really when I see either the home builders or it used to be the automobiles holding really well when the general market's very weak, that says to me, hey, don't ignore that there's going to be a big rally coming up at some point if the cyclicals, like these heavy cyclicals, are holding quite well. If you look at the HGX, well, let's just go here. This is the weekly chart that I show my subscribers every week. The wood made an exact double top, 82.90 the week of the 20th of April, and 5 or 6 cents lower last week. And that was a U-shaped pattern with the technicals fading on the right. And here we are down in the Wood iShares Global Timber and Forestry ETF at 80.44, down $1.40. Still no big deal, but we're starting to test that rising uptrend support line. But it's the HGX I wanted to show you, up 47 cents. The Philadelphia Housing Index is up. And that says, if you look at Toll Brothers, I spoke to Tom about it the other day, Friday when I was interviewed, said maybe they're going to hold, maybe fund managers are going to have the pleasure for a change of being able to buy the home builders for at least a pretty decent bounce. So this is a good sign so far in the rotation. And the IYR is a question I had, and that is the U.S. REITs index trading up 21 cents to 77.53, hugging the 200 moving average. The REITs are holding pretty darn well. I'll be back straight after this.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So look, the DOG, which is 1-to-1 short the Dow, which we periodically have, now I was going to buy yet today. If there wasn't a big spill over, I thought if Monday we were open, I would do that on Monday. Well, we never had a chance. Well, we didn't have a chance. I didn't take it today because I didn't want to buy a gap down, or in this case, a gap up. And here is the diamonds. And you see this relationship here? Maybe you'll see it a little bit better if I go here and do it live. Where is it? Right here. I think that's it. Yep, there it is. So, that's not the one I use, is it? Well, you can see it nicely. What we're looking at is, look, the DOG has had this, looks like the bond market over 3 decades. This is just daily since July of last year. In 1 year's time, look at this, just down, 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 down. Then it flattens out. Remember, the Dow made its high in January the 26th, right there. Then what happens is, sharp pullback, the lowercase h goes to a lowercase m, and you've just seen a whole series. You can have a whole bunch of these things. Normally, when they go on for a certain time, there's one sudden bad news event, and that's what I said to subscribers. We've got to expect, I'll talk about it in a minute, we've got to expect these little, these cascades to the downside every once in a while. But look, the DOG is just stuck in that range that I was showing in my daily chart, which is right here. Is right. Oh, mistake. I don't even know what that is. No, that's the wrong one. Okay, so if I'm looking at, so here we go. If I'm looking at this, that represents the rectangle is what you want to see. What is my expression? A rectangle can last a lot longer than your patience. So all we're doing is we're chopping around in this. It sounds horrible. Down 400 points. No, you're just stuck in this rectangle. That's all. So that's going to be very important. Then there was another chart that I want you to look at. Is that single chart right? Yep, there it is. So this chart, which I show my subscribers for a long time now, I had the template of what I was drawing, and we followed that pretty well. Also, the lowercase h that goes to the lowercase m in the Dow weekly chart, and I have 5 different moving averages. And what happens is we're getting to a narrow range. Remember in Bollinger Bands, when they get to a narrow range, suddenly you can break out. Well, we got to that narrow range right there. And what I said is that, and this is why it's in red, that it would appear that there could be 1 or maybe 2 very sudden bad news plunges with commensurate counterpoint action with very high VIX volatility index, which we'll talk about now, question about the VIX by Julie. I'll get to it. With up spikes to come, and only then will the markets be ready for another strong buying phase. So what does this mean in real terms? It means to move this away, so I can show it to you in real terms. Let's get out of this right there. And let's go to, can't even remember if this is the one. I think it is. Yep, that is it. So you remember I just showed you the chart. There's the inverted V, makes a regular V, inverted V, and now we're coming back down. So those are the patterns that we looked for. They've been very good bellwethers and benchmarks, and you're stuck in a range. Now, here's to Kevin's question. Where do you think it'll be? Where do you think we should stop on the downside? Number one is between this area here of 23,500s to 23,300s. This 23,344 was the low that was made back in April, the low of April. I'm thinking that how events unfold is going to be very important. I'm also looking at, here's another question. So the lowercase h that goes to a lowercase m, what happens? Well, what happens is if you go to, look at this chart here. Remember the GLD when I said, we've made a major top. It could be a major top in the GLD monthly chart in gold itself, but I use the GLD because most people, as far as I can tell, majority of people are able to go to an index, an ETF, rather than the futures. They don't always get the futures. They can see it maybe in a historical context by going to maybe stock charts or something like that, but their own software package might be a little difficult for them to go to the futures. You remember this H pattern that went to lowercase m and then broke? There's a certain time and there's a certain, how can I put it? There's a certain time and a certain incremental lower highs and lower lows that I follow very closely. And that was from the top. The H started at the top. And then it broke down and you go to a one-to-one to the downside. And then you start another lowercase h that goes to a lowercase m. But what happens is all of a sudden you've got a down channel because you're making lower lows and lower highs. So there are a series of things that we can look at. Now let me show you something else. We're going to go to the INDU, the Dow, and you'll see we're at this high level above the 9-period moving average with the end of May coming up on Thursday. So it's just a few days to go, 24,354. And where is the 9-period moving average? Around about 24,016. Let's call it 24,000. Hey, it's not a big deal to drop another 355 points in 4 or 5 days. Will we do it? And that's the big question. The MACD hasn't closed lower in May, although it's starting to narrow. Stochastic's very weak at 69%. Yet the on-balance volume, that is the total volume, adding up every month, if it's an up month and subtracting if it's a down month, that's a running total, is rallying quite nicely. So I think that I can be very clear to say the absolute P level is a close in a weekly chart below 23,300. If it goes below that, we could open up the floodgates to a lot more selling. My thinking is if we can keep this rotation up, for instance, if we look at, say, we'll go to the IBB, which is the biotech ETF, holding quite well within this range, not great, but holding means that the longer it holds, the greater the chance that when money starts to flow back into the market, or if it's holding while the general sectors, different cyclicals and whatever, banks start to pull back and the IBB holds, that could become an area of running strength. So that's the way I like to look at this. Now, I had a couple of questions that I might have missed. Basil, you think we will make a major top in the next 12 months? 12 months takes you to April or May of next year. I'm going to say no. If it's a major top and it has to do with all the cycles and the skyscrapers and everything that I look at, I don't think it can occur until late in 2019. Whoa, could be so wrong, but that's my thinking. Now, will it be the major top in 2019? Do we start packing up our bags and looking for accommodation in tents and buying canned goods like some technical analysts have been recommending for about 6 years? that I mean, you hear them all the time. You get these emails saying, stock up now, whatever. This is the worst. I have a newsletter. I've never subscribed to it. I don't know how it came to me, and it's been coming every day for maybe 4 years, and the title is Biggest Asset Bubble in History. So this person has missed, at least from December of a year ago, where I know he stopped his daily newsletter, but he does the bigger market thing, looking for a crash, and it just hasn't.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Always don't forget, Steve Rhodes comes up straight after this. Then you got Dave White, you got Tom O'Brien, and then Tom O'Brien. So, couple of things. Don't forget tonight, 7 o'clock at MIT Building 330, room 335, giving a talk at the Boston Investors Group. I'm the guest speaker, so I'm looking forward to it. Great time to be doing it because there are a lot of, I like challenges. This is another one of those challenges. So we'll see what happens. A question about the E-mini. Yep, real quickly, I forgot to do that right at the beginning. I'd already got everything set, and then I forgot. It's just made a trough D in the 110-minute chart. It made a peak D after a nice rally going to the 2709 area. 2724 was the high today. Really sharp pullback. Just trying to bounce here. We'll see what happens. This is still, although you wouldn't believe it from the score, with the Dow down 380, S&P down 30. It's very interesting that you've still got some strength. Look, the IYT is down 254, 194.08, having made a peak E. That's the reason why I'm starting to get a little bit cautious because of all these Ds and Es in the weekly, but the monthly, no, daily charts, but the weekly charts are very good. Look, left side, right side, and it had an overlapping wave to a D, and that's really great. And then once you get the D, expect a little bit of a pullback. So holding quite well considering the market at this particular point. So let's do a couple of things here. PM, which is Philip Morris trading. I don't see anything. I did a lot of work the other day on the dividend type stocks. Look at this, XOM. So Philip Morris not doing well. XOM pulling back quite sharply, having made a particular G right there, a G top, and at 77.91. So I'd be careful. This is just a time for having a little bit more cash. Walmart, what's Walmart doing? Question about Walmart. GT, yes. Walmart, no, the ones that I have this pattern at the bottom going to lower lows, I think we have to wait. They'll be ready for a pretty decent bounce. I think it's time, maybe now more than price, that I'm looking at sectors like Walmart. XRT is a question I had. XRT is holding quite well, actually, more towards the upper end of the mid-range. That's the S&P Spider Retail. So I'm going to be doing more of this tomorrow. Meantime, back at the ranch, before we wrap up, the VIX Index. The VIX Index, I said to my subscribers, we always look at the TVIX. Yep, this is where it's going to go, and this time we could hold quite well. I just didn't really, I don't know what it was. You know, when you've got some longs and you're trying to make as much as you can for subscribers, it's better to not make mistakes. I just didn't want this to be one of those quick pops to the upside and then it turned down. TVIX is up 14% at 551. We would have had to chase it to get the gap. I'll consider it. Maybe we'll see if I see that there's going to be a whole week of consolidating here. Then the VIX, in fact, the TVIX trading at 550 right now, 68 cents. I can see it getting to 6.03, 6.15. We'll see what happens. Hey, stay tuned. You've got Steve Rhodes. I'll be doing the update right now. But check out my opening call. I think you'll enjoy it. Hopefully you'll make money. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.